Welcome to XM.com for today's daily market comment by Raf Boyadjian. I'm Cristina Marujas. The rout in bond markets is far from over as the sell-off accelerated again on Wednesday, pushing global yields higher. The U.S. 10-year yield came within a whisker of hitting 1.50%, while Australia's jumped to 1.80%. Although it's a little calmer today, the bigger problem is that central banks are unsure yet as to how to respond to these jitters. The consensus within the Fed is that higher yields are a sign of a healthy economy. However, if policymakers are unable to calm markets and yields continue to surge, a sharper tightening in financial conditions will begin to bite for corporations and make it substantially more costly for the government to borrow at a time when it is planning on issuing a record amount of debt. As Chair Jerome Powell prepares to deliver his final remarks before the Fed's blackout period begins ahead of the March 16th and 17th policy meeting, speculation is growing that he will use today's event to signal some action in the bond market. While it's not very probable that he will announce a policy shift, he could sound more concerned about the spike in yields than he did in his last appearance. The question is, will jawboning be enough to put a lid on Treasury yields, or will the Fed eventually be forced to conduct another Operation Twist like it did in 2011? Despite the slight pullback in yields today, major stock indices around the world were mostly in the red. Today's losses come after Wall Street failed to rebound yesterday. The S&P 500 and Nasdaq Composite both dropped sharply for a second consecutive day. However, futures were recovering from earlier lows and may yet turn positive as European stocks fell only modestly at the open. The weaker risk sentiment nudged the US dollar higher on Thursday. The greenback advanced against the euro and pound as well as versus the yen and franc, with its index last up 0.27%. But it fell back against the commodity-linked dollars, which benefited from the increasingly bullish outlook for commodities. The loonie hovered around 126.50 per dollar as investors awaited the output decision by the OPEC Plus club of oil producers. Reports that OPEC Plus may decide not to raise output in April after all supported oil prices. This was today's Daily Market Comment. Thanks for watching at XM.com.